Hey guys, Scotty Appman here. So I did just want to do a follow-up with the video that I posted earlier today about the quarterly meeting that the realtors in West Branch Valley had today. And just go over some notes that I took about some stuff with the lenders that were there. We got to do a little Q&A with them and do some discussions. So I just wanted to go over that. So here we go. So the first thing I'm going to go over is what to expect as a first-time home buyer in this current real estate market. So the first tip that I would give to first-time home buyers, and also what the lenders said at the meeting, it'd be wise for them to sit down with a loan officer from a bank or a lender and just, ask them about different types of mortgages and, what their terms entail. For instance, like with FHA loans, there has to be handrails going up and down all flights of stairs. And, so it's good to sit down with a loan officer and get a better understanding of the loan types and what their terms are. Another good question is you should ask your loan officer, how quickly would you be able to close in the home that you're purchasing? Every single person's credit report is different. There might be more conditions that need to be met. So it would be a good idea to just ask your loan officer, how much time do you need to close on this property? And another thing is just sit down with your loan officer or your lender or whoever's handling your mortgage at the lender you're working with and just ask them any questions. There is never a bad question, and I stress this to my clients a lot. There is never a bad question when purchasing your first home. It is a very big decision. It is probably one of the biggest financial decisions you'll ever make in your life. So definitely ask questions. There's never a bad question. Another thing that we went over in the meeting is interest rates. Interest rates right now are going up quickly. Typically, interest rates right now are anywhere between like 5 and 6%. And obviously that also depends on your credit report and your credit score and other things like that. And interest rates are expected to go up to between 7 and 8%, but your interest rate completely depends on where your credit score and your credit report is at. What I would recommend doing is reaching out to your lender or your loan officer that you're communicating with about getting a mortgage through. Just reach out to them and ask them what the current rates are and what you can expect to have as your mortgage rate. Another big thing that we talked about in the meeting is appraisals. So if you are getting a mortgage loan to purchase a home, you have to have an appraisal on that property. The bank wants to make sure that the property is worth what you are paying for it. And appraisal costs are up right now. I mean, the lenders that we talked to today, they said appraisals can be anywhere between $650 and $1,000. And that also completely depends on your loan type, because with certain loans like FHA loans, if some things were brought up during the first appraisal, they might need to do a re-inspect, which can be, about $150, $200, so that they make sure those things were taken care of before your purchase. And a big contributing factor to why these appraisals are going up is appraisal management companies. Personal piece of advice here. If you get online and go on rocketmortgage.com and you get pre-approved on Rocket Mortgage, don't do that. There are plenty of lenders in our area that work directly with Rocket Mortgage and Quicken Loans, and they'd be able to get you a pre-approval that is way more accurate. So we also went over the benefits of using an in-house lender, a secondary mortgage lender, and a credit union. So there are benefits to using all three of these. An in-house lender, for instance, is going to be able to do some unique loans that you might not be able to do in the secondary mortgage market. The benefits of using a secondary mortgage lender are secondary mortgage lenders take your credit information and they put it through a system where they can see multiple lenders and multiple different rates and options, and they can choose which one best fits your needs. So a secondary lender might be able to take 10 or 15 different mortgage lenders and see which one best fits your needs, and then you can go with that lender. Some benefits of using a credit union are they can also compare your information with multiple partners, and they can put you with the investor or the lender that best fits your needs. And if your credit isn't good enough to purchase a home right now, credit unions actually have programs that will help you build your credit so that you're able to purchase a home in the future. I'm going to do a brief thing on builder loans now. So Motto Mortgage actually has a program. It is a one-time whole build and land purchase. And literally they do everything. They build the house, they purchase the land, they build the house, they dig the well, they dig the septic. Everything is inclusive. They literally do everything, and that is for a 5% down payment. I didn't get a whole lot of information about Jersey Shore State Bank's construction loan, but they went over that they have a 15% down payment construction loan. I'm assuming it might be about the same thing, but I could be wrong. If it isn't that, somebody help me. We also talked about down payment assistance programs. So with Motto Mortgage, the lender will grant you a 3.5% down payment assistance, but you have to occupy the property for 5 or 10 years. I think it might be 5, but I'll have to double check on that. And you have to have a minimum FICO score of 620. The people that can use this down payment assistance program is first-time homebuyers, any educators like a teacher or a professor, and first responders, which might be nurses, police officers, EMTs, that kind of stuff. With that down payment assistance program, the house can only be in a certain area, sort of like with USDA. With a USDA loan, you're not allowed to purchase a house that is in a city. It has to be in a rural area. And again, I might be a little bit wrong with this one. With Jersey Shore State Bank's down payment assistance program, what they do is they take out a second small loan to help you pay for the down payment on the property you are purchasing. I will double check on this and check back in tomorrow, promise. And the last thing that I'm gonna go over is this thing called lock and shop. So lock and shop is when you lock your interest rate in while you shop around for a house. Your rate is locked in between 90 and 120 days depending on the lender. It's a really convenient tool that lenders are using right now because rates are going up. Thank you so much for watching today's video. I'm Scotty Appleman with the Edge team with Real Broker LLC, and I'll see you in the next video.